Hello everyone, today is Friday, July 30th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning into one of these videos, welcome. It's good to have you here. Thanks for joining us. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. So we drill down beyond just price and charts. We look at things like sector performance and correlations and credit markets and volatility and pick apart everything that stands out and looks interesting or different. And then in part two, we jump into the charts. We look at those longer term trends and try and make sense of everything and best position ourselves looking ahead. So hopefully that sounds good to you. Hopefully you're in the right place. Let's jump into this week's headlines. We saw ranges actually narrow this week, which was pretty interesting, maybe a little bit of counterintuitive as well, given the fact that we had such a highlight reel of earnings announcements this week. Basically, the big mega cap tech companies, mostly all reporting earnings this week, mostly kind of negative, slightly negative reactions across the board. It was a pretty muted reaction, and I think that ultimately is what helped indices kind of stay in place. We did see some big moves in the dollar, so we saw the US dollar roll over this week and start to break down, which is the first time we've seen real weakness there over maybe the past month, 2 months or so. And we also saw lots of volatility in the Chinese market, so a lot of the ETFs over there. You could look at FXI, you could look at KWEB, you could look at CQQ, and you could also look at the individual stocks. Lots of pressure over there. We did see a bit of a rebound off of the lows, but certainly quite a bit of volatility. Now, if we look at performance here on the week, if we look at the right-hand column, you can see again pretty muted reactions here in the Dow and the S&P 500. Remember, this is coming off of a big sort of reversal week last week. Remember, we had the panic early last week. We saw buyers kind of step in and we effectively closed at or near highs. And now this week we basically traded, pretty sideways and digested maybe a bit of what last week's action really, looked like or put into the upside. The Nasdaq was down the largest this week, so a little bit of change of character there. Again, like I say, most of those big mega cap tech earnings companies were slightly negative on their earnings reactions, and we saw a little bit of a sort of rotation into the Russell 2000. We saw finally the Russell kind of outperforming for the first time in quite some time. Look at the 1 month returns here, and you can see the Russell is firmly negative while the rest of the US is positive. We also saw US or ex-US world stocks ex-US down slightly this week as well. If we take a look at market internals, it was a pretty encouraging picture here. If we take a look at that top row of number of stocks, 52-week highs minus the lows, take a look at Thursday, really take a look at Wednesday, Thursday, Friday action here. You can see that these numbers gradually started to improve to the upside. Remember, Friday's numbers are always estimates here, so I never have the final data when I do these videos. So what you'll notice, though, is that we're getting into triple digits again here towards the end of the week. 500 net new highs on the week. That is encouraging. That is constructive. That's exactly what you want to see if you want to see this market hold up and continue to act well. AD line, you could see positive 1,000 stocks on the week, and we do see percentage of stocks in the S&P 500 over a 20 SMA all the way up to 70%, which is one of the highest numbers, highest readings we've seen in quite some time. If we take a look at the 52-week highs minus lows summed up over the past, or cumulative sort of sum up over the past 30 days, you can see again that trend is extending to the upside. You can see it's also kind of expanding now towards the end of the week. That's exactly the trajectory you want to see, and we'll look to see if that can continue into next week. If we look at sector performance, pretty positive this week. We had a new sort of leadership bunch, though. We saw materials, we saw energy, and we saw financials. That looks like, smells like what we kind of started the year with. That was, remember, when the small caps were dominating, value was dominating, and that's kind of what we got a taste of this week. Now, I think some traders may be looking to see if that rotation back into value is going to occur right here. I'm not so sure if that's the case, not denying it either, just don't have too much real confidence that that is actually going to take place. But that was the trade we saw this week. And if we see consumer discretionary, communication services, and technology, aka more growthy type stocks and sectors, were on the decline this week and in the red. If we take a look at correlations, a couple of interesting correlations going on here this week. We saw a pickup in gold and TLT to that is inversely correlated to the stock market averages. So Dow, SPY, Nasdaq. Take a look at the minus 0.6 readings here in gold. Take a look at treasuries, long-term treasury bond TLT, minus 0.7, minus 0.58, minus 0.51. You could see that those correlations are starting to creep up. So basically, we saw the gold market TLT working higher this week. We saw stocks going down. That is a relationship that is developing. Remember, correlations over the past 10 days, so it's a very short term, fairly noisy window, but we like to just pay attention to what moves together. Take a look at also this Bitcoin and dollar correlation here, minus 0.815. That's certainly what the classic trade is there, or what lots of those Bitcoin bulls like to see in this sort of, dollar decline, dollar demise environment, that Bitcoin is a beneficiary. If we take a look at volatility here this week, not a big change. And, in some respect, that makes sense. We did see, of course, earnings come out of the way or get out of the way in terms of the big companies. We would have expected maybe the VIX to dip a little bit more. If you kind of showed me after the fact that we got through earnings and markets were relatively unscathed or unchanged, I would have expected volatility to be a bit lower. So it is kind of curious here that it's holding up around 18. I don't think it's a doomsday signal or anything like that necessarily, but I would like to see the VIX start falling back below 17 to again kind of confirm or help suggest that the bulls are in fact here ready to rally, or ready to continue to rally. Interest rates, we saw yields going down across the curve this week, which basically means bond prices up, yields down. Pretty marginal, but still that was the relationship we saw. Credit markets, investment grade bonds, high yield bonds, not too much to say there on this week in terms of standouts. If we look at dollar and commodities, again, we saw the dollar index fall almost 1% this week. That's a big move for the dollar. We saw gold benefit, silver benefit, Bitcoin up 13% this week. So lots of benefit there for the old Bitcoin. Don't know if it's all attributed to the dollar, but certainly doesn't hurt. And we did see agriculture, so DBA here, take a little bit of a breather, natural gas take a little bit of a breather, and crude oil getting back towards those year-to-date highs. So put it all together, we had a bit of a mixed week out there. We saw market breadth continue to be encouraging. We saw credit markets in line doing what we expect, but vol environment, risk sectors, and equity markets, just generally speaking, couldn't quite get the convincing check mark here. So we got a solid C for this market, which maybe is a little more pessimistic than the data would suggest. But on the margins here, I'd say that there's some room for improvement, and we'll have to see how next week follows this up. If we take a look at how we are positioned, so our two trading systems here, Merlin and Lamerick, you can see that Merlin, good old faithful here, still very much invested in this market, still exposed long, rotating through positions and doing some changing underneath the hood of what it's actually owning. But in terms of exposure, still right on in this market. And you can see our shorter term Lamerick trading system, much more cautious, defensive here, and actually taking on some short positions right now. So it is net short across two positions. So pretty much cash heavy and just taking a little bit of a bet here on the downside over the short term. So that's how we are positioned. Of course, these allocations change on a day-to-day basis, and generally I only update these on a week-to-week basis. So remember, things change in between, and just be aware if you're trying to draw any extreme conclusions on either of these systems. So with that, we'll be back here in just a moment. One of the most common questions I get from traders after listening to one of our market analysis videos goes a little something like this. Evan, there's so much information. There's so much to consider. Should I be bullish or should I be bearish? And I respect the question because there is always a lot of information to think about and it's almost always conflicting. That's why these videos are designed to help you objectively frame out markets, but it is on you to execute and pull the trigger based on all the information that we talk about. Now, if you're interested in the stocks and ETFs that I am personally allocating to, then it is our Merlin and Lamerick trading systems. Merlin was built to invest aggressively during healthy market environments and then step aside and get defensive to avoid large corrections. It patiently holds trades for about a month at a time, and it primarily trades growth stocks. You can have a full-time job and easily execute on the signals after the market closes. Our Lamerick trading system is a much shorter term tactical strategy. It holds trades on average for just 4 days, and it trades long and short, which allows it to perform well in more difficult, choppy, and volatile markets, and still no intraday screen watching is required. If you want to learn more about these trading systems, head to thetraderisk.com/systems. There's also a link appearing in the top right hand of your screen. When you sign up for one of our trading systems, you'll be given a login to our website. You can access our nightly trade reports. You'll be put on an email list so you can easily learn more about the trading systems and follow along easily after the market closes. We also have 14-day free trials available. Head to thetraderisk.com/systems. And now let's get back to the show. All right, we are back here. We've got TC 2000 open. We're looking at our equity market grid. We've got price itself is the white dashed lines you see on all these charts, and the multicolored dots are a custom smart trend filter that we've built. It measures price and volume across time, and it helps us determine trend and trend strength. So if we look here at a weekly time frame on our smart trend filters, you can see that our outlook, our bias, and our thinking of where the market direction is going to be headed hasn't changed from our stance last week. You can see the S&P 500 still bullish, even though we had a down week. Nasdaq still bullish, even though it was down over 1%. You can see that the Russell 2000, even though it was up this week, still yellow here. And I think, again, this speaks to kind of the sort of real reason this indicator was created. There's a ton of ways you can measure trend and follow moving averages, and our smart trend filters do resemble moving averages, but it is this choppy period where lots of trend filters, trend indicators can get you whipsawed back and forth, selling, buying, getting in, getting out. And you can see that if you're looking at this type of model here on a weekly time frame, we're still just in this yellow zone, which is basically saying expect chop and pay close attention. And right now, the prior signal that we always give the benefit of the doubt to is to the upside, or is bullish in this case, which would be glass half full mentality. That's the way I like to think of it. So right now, jury still out here for the Russell. Lots and lots of yellow indecision going on here in the Russell, but it hasn't definitively made a break as of yet. So we're still watching that one, but we see the Russell now getting closer to its trend filter there, and we see ACWX international stocks still yellow here as well. But they have been that way for the past month or so, and continue to kind of hug our smart trend filter. Now, if we go down to a daily chart, this is where, of course, we get a little more noise. We're looking at the shorter term price action. We can see in the top here, both the NDX and the S&P 500, both still green and bullish. So there's no real change or different outlook to speak of there. You can see that the Russell on the daily chart, right? So this is where time frame absolutely matters. It is also yellow, but the prior signal here is red. So we give, again, the benefit of the doubt on the daily chart a little bit more to the sellers. So this is where, having a time frame and using multiple time frame analysis certainly helps and can get you some more evidence or weight to know which direction you want to be trading in. But you can see that we are back above the daily trend filter here, and early next week I think will be interesting to see which way the Russell starts to tip its hand, up or down. ACWX here, again, even though it has been yellow on that weekly time frame for a while, it has been nothing but bearish or yellow on the daily chart for, again, about the past month or so. So that's the way where, at least just thinking broadly, trends, where should we be looking for markets to head? What is our bias? And now we always like to go to our candlestick analysis, and we like to just get a little bit tighter around price action. We want to look at supply demand candles a little more specifically to draw some more conclusions. Now, when we look here at the S&P 500, which is where we're going to start, you can see that, again, lots of chop came in here this week, and we are trading essentially at all-time highs, but we are moving sideways here now in the very short term. So you can see this little range that's getting carved out, and it's occurring right over the breakout highs here that we, broke out from late last week. So right above this July pivot high here, or this range high, is where we broke out, and now you can see we're kind of settling in right here. So this is kind of an interesting spot. Again, short-term traders, you're going to want to pay attention to this range because it is kind of a key range now at an interesting spot. If this starts to, I'm going to be a little more generous here and kind of slide down and, overlap over some of these wicks. But basically here, my broad strokes would say that if we start falling below, 43.85, only 10 points really, 25 basis points, 0.5% from where we closed this week. But if we start closing back below here, that would get me in the short term, again, time frame matters here, but in the short term would get me more cautious and suggest to me that maybe we have room to come back down into this hold range and head back down into these lower 4300s. Again, not saying that has to happen. That's what I'd be prepared for. That's what I would expect if we start to see a sell-off and a loss or breakdown of this range. Of course, if we hold in here, maybe even if we come in Monday with some type of wick down here, kind of another short-term rug pull, and then reverse sharply and kind of stay above in this range, then, all bets are still on here. We're essentially trading or looking at a market that's at all-time highs. So it's tough to be too bearish, but we do have at least a little bit of cues we can pay attention to in the short term to see if that bearishness starts to creep into the market. Overall, longer term, I don't really have anything new to say. We're in an uptrend, longer term support levels all the way back down into the lower 4,000s. We're just ways away from any of that right now. So life looks pretty good here on most longer term time frames. If we look at the Russell 2000, you can see here it's at a bit of an decision point. It's at the middle of the range again. So if we, kind of simplify things at this view here, this is where we've been and what we've been looking at in terms of our roadmap all year long for the Russell 2000. And all we've had recently is a support bounce once again from the lower end of this range, and it's brought us all the way back up. So we've got basically a 5-6% rally off of the lows, and we're just right back to essentially the dead center of this range. So we're back to this kind of decision point of, are we going to head back all the way up to the 230s and test the top end, or are we about to roll back over and come hitting against this 210 area? That's what we're looking for here. But time frame, if you're a longer term trader, you're just kind of sitting on your hands, hopefully ignoring all of this noise. And if you're a shorter term trader, well, trading ranges, you want to kind of trade those extremes. So there's really not a whole lot for you to do in this middle point either, as far as I can, would frame out markets. So kind of wait and see mode for the Russell. Last but not least, if we look at the Nasdaq 100, we've got kind of certainly a more similar story to the S&P 500. We've got a sort of range that is developed here now over the past 5 days. You can see it's kind of cheating underneath this little July high here. So the structure in the Q is actually not as ideal. I think from an S&P 500 standpoint, this looks a little more clean in terms of its positioning versus the Qs, but still we see it holding up, essentially at highs. So very similar comments to the S&P 500. We just want to see this holding up, not rolling back over and coming back down into this range if we're going to keep this acting as bullish and constructive as possible. Of course, you can draw your other trajectories here. If you're a fan of trend lines from, the May lows, you can start kind of getting your slopes and your diagonals in place here to draw out some channels and look for those breakdowns. And that's certainly helpful if you like to look at that view as well. So that is really the broad market take there. That's this price structure, trend analysis of where markets are, and some of the near-term levels to pay attention to. If we start to look at some other markets, let's take a look at the VIX. You know, I expressed my concern here that I'd like to see the VIX just get back down into the under 17, into the 16s, kind of where we were back in June and July. That'd make me a little more comfortable on the bull side of things, just to, you know, kind of let the market tell me that there's not a lot of hedging or uncertainty or risk being priced into the market. I like when I see the VIX kind of falling with a rising market. So the fact that it's kind of still holding up here, holding above last week's lows, you know, gives me just a little bit of pause there in the very short term. So let's see how that acts next week. Right now, though, tough to draw any too extreme conclusions as far as I see it. A couple of other markets I wanted to talk about. Silver. If we look at silver on a weekly chart, I think this is kind of an interesting little single bar weekly candle here. It is, you know, kind of like the Russell 2000, where this has gone nowhere. This has gone nowhere for an even longer period of time, ever since topping out around 27 back in July of 2020. But you can see now we've got a little bit of a reversal week here. So the bulls might be able to stick it. There's some support in here, right? Going all the way back to the start of this year. It almost came back down to the year-to-date lows, and you can see a little bit of reaction there. So silver, keep an eye on that one. Could be a nice little trade setup, presenting a move back up into the mid-20s. And if we look at UUP, so this is our dollar index. You can see this rolled over this week. So take a look at the minus 0.84% action. It's the biggest down week we've seen since May of this year. So all the way back here, we were down 1.27% on the week of the May 7th. You can see that's fallen back down. We nearly got back up. So our price target here, I think when we made this move, we basically were calling for the dollar to kind of move back up into this this high area here of the year, and we didn't quite get there. So I don't know if this move is over. I mean, it looks a little shaky here, but I was expecting, you know, kind of a dollar rally up into the mid 25s here for UUP. Maybe that's all we got was 25, you know, 25.04. And it's time for lower, but you know, broadly speaking here, still pretty range bound and sideways, all things considered. Now, if we move down into sectors, I want to talk about semiconductors making a notable move here. Remember semis? We talked about this in here right when this consolidation was occurring, and we said, you know, one of our takeaways was you got to be careful if this kind of looks up above this range and then suddenly kind of falls down and rejects it. You could be left with a false breakdown. We basically did get that, but we didn't get any big meaningful reaction off of it. It's not like we came cratering down to the low end of this range or anything. We did have a dip all the way down to 242, but that was about it. And now you can see we've got new all-time closing highs for semiconductors. So this is a pretty encouraging sign here. Even though technology was generally speaking weak, we saw semiconductors making new weekly closing highs. So that, I think, again, is maybe a glass half full situation here with a strong leading sector, influential sector like semis closing at new all-time highs. So last but not least, let's move into our last kind of routine here is where we look at some of the sectors and industries of interest. You can see this week we had lots of things from the basic materials side, and that was really dominating sort of the list here. So those are things like aluminum. Let's go to a weekly chart. So we have aluminum here breaking out of new highs. We see building materials here breaking out of this range to new recent highs. We see coal breaking out. We see paper and plastic products doing some heavy volume there, trying to move higher. See steel moving higher. So those are lots of that basic material sector. We had some financials here. So asset management, we saw insurance working. We see medical devices breaking out to new highs here, which is encouraging. We see some more industrial staffing and outsourcing services here breaking out to new highs. We had a few tech. So we had communication equipment. We saw scientific and technical instruments breaking out. We see semiconductors, which we just talked about, breaking out. And then we had a couple of utilities here, or generally speaking, the independent power producers, more specifically speaking, that is, and then semis, SMH, which we just talked about. The only thing that came up on our bearish of interest scan was integrated shipping and logistics. So this came cratering down this week, probably earnings. I don't know what the story was here, if there was any big standout loser. Looks like, I mean, I see Air TW. Yeah, this is a penny stock. I don't know if this is really moving things. But anyway, some homework there. If you're interested in this, integrated shipping and logistics, industrial sector, selling off pretty sharply this week. So something you could investigate if that's your cup of tea. So that's it. That's what I've got for this week's market analysis video. Hopefully you found it helpful, kind of looking at the whole frame of market in this fashion. Leave a comment below. Let me know what you're looking at this weekend. What's got your eye? What's got your attention? What stood out to you this week from our analysis? Leave a comment. Always love to hear it. And as always, I want to thank you for tuning in and listening every Friday to our market analysis videos. You can subscribe to our YouTube channel or follow us at thetraderist.com. All the videos always get published there. Have yourself a great weekend, and we'll see you back here next week.